this incredible space. So on that note, I'd like to welcome my guest, Mohammed Aurangzeb, Minister of Finance and Revenue of Pakistan. Welcome, sir. Great to have you with us. Khalifa Al-Shamsi, Chief Executive Officer, E& Life, Acting Chief Executive Officer, E& International and E and United Arab Emirates. Khalifa, great to have you with us. That's quite a title. You'll explain to us why it's so long in just a bit. Amna Ajmal, Group Executive President, Merchants and Commerce, Digital Partnerships, Fintech and Enablers Strategy, M&A, MasterCard. Great to have you with us. Thank you. Blythe Masters, Founding Partner, Motive Partners. Welcome. And Amna, sorry, why is everyone, what's that noise in the background? Fantastic. And Omar Ansari, Chief Executive Officer, ABHI, United Arab Emirates. Great to have you with us. Welcome. Round of applause, ladies and gentlemen, for my guests today. Minister, I'd like to start off with you. And Pakistan is such an interesting economy. It's emerging. There are a lot of exciting elements to the economy, but you also have a lot of macroeconomic issues right now. I was looking at how many people use cash in Pakistan, and it's still dominant. Around 40% is still cash. What are you going to do to change that? And is it on your priority list? I know that you're new as finance minister, 6 weeks on the job. Is this something that's on your to-do list?
Yeah, absolutely. Thank you. And it's a pleasure to be here. As you mentioned, macroeconomic issues are there, but we have entered this year on a much better note than we were this time last year. All the macroeconomic variables are moving in the right direction, but certainly we need to bring in more macroeconomic stability and more permanence in it as we go forward. But coming back to your question, it is indeed a big challenge. We have 10 trillion rupees cash in circulation in the country at the moment, and if you compare it to our annual revenue budget, it's about 9.4 trillion rupees. So it's almost, half of the economy is in that undocumented sector. So
that's the informal sector, essentially.
Correct.
Yeah.
So from our perspective, we need to reimagine our economy the way other countries have done, with the help of get onto the digital solutions, and we have two important pillars. We have the national identification being supported by NADRA, and we have a real-time payment system called RAST. And these are two important pillars through which we can actually start moving towards sort of documenting the economy through digital solutions. As we speak, actually on Friday, I signed an agreement with McKinsey. They are going to come in and actually help us with end-to-end digitalization of our tax authority. So they'll work on the design and they'll work on the implementation side as well. But to answer your question, it is a huge, huge priority for us as we go forward.
Fantastic. I would like to ask Omer, who also, with your company, ABHI, you have operations in Pakistan, Bangladesh, in the UAE, and you're going to be launching in Saudi as well?
Correct.
And just listening to the minister, that it is a priority, digitalization in the fintech space is vital. But because you're doing it, I want you to give me a sense of how difficult it is for mass adoption in a country like Pakistan.
Yeah, so we've been around for about 3.5 years now and started our business in Pakistan. And the biggest reason why we went in is we believe the democratization of payments only happens when you have essentially zero fee being implemented, which then causes mass adoption. So you look at UPI in India, you look at Pix in Brazil. This is something that RAST is trying to do in Pakistan at the moment, because the truth of the matter is that when you go to a stall and someone who's working on the street, they typically prefer cash over, and cash is actually the most frictionless transaction over digital. However, what we focus on is much more on the credit-led, because if you ask the average person what they need credit. They don't need an easy way to pay another person.
And to get credit, you need data, and you need to know your customer.
Exactly. So we're a credit-led fintech, so our focus has always been provide credit as a means for you to create mass adoption, as opposed to forcing payments on individuals, because that's not really that's not fixing a pain point. The pain point is I can't pay someone else. That's not what they're complaining about. Their complaint is I don't have enough cash in my pocket for me to be able to increase my lifestyle. And so our focus across our geographies, and Pakistan specifically, and where we've been able to push adoption, has been being a credit-first solution in that geography.
Fantastic. Blythe,
Can
yes.
I just, sorry, just do 30-second intervention? I think he's absolutely right. I mean, as if the latest figures I have is there are roughly 700,000 SMEs and about 6 million farmers who are being offered credit through digital solutions. But this absolutely needs to be scaled up as we go forward. With a population of 250 million people, and unfortunately still growing at the rate that we are growing, this is just the start. So Mayor is absolutely right.
Yeah, exactly. And to be able to offer those farmers credit, you need to know who they are.
Yes.
Minister, I mean, you need to know, you need to have data on them. You need to know that they're going to be paying back, which, I mean, sort of like a cycle that we need to focus on. So Blythe, I want you to jump in here. You're an investor, so you're evaluating startups. What are you looking for within this space that shows the potential for cross-border, transactions, for immense growth?
So for context, Motive Partners is a specialized investor. We have somewhere in the region of about $6 billion of funds raised under management that are deployed exclusively in the financial technology space. And that covers both startups and much more mature businesses, including those that process trillions of dollars of notional through the pipes of the technology that they build. And our business spans North America and Europe, but many of our businesses have activity in the emerging markets. And it's great to see a fellow alum from JP Morgan, Your Excellency. Good to have you here. So what do we look for in terms of businesses that have potential? I think the first point to focus on is we want to look at the underlying goodness of the fit of the product that's been developed and the opportunity of that product to gain traction in its respective market. And one of the biggest opportunities that the emerging market economies have is, frankly speaking, to leapfrog. So a lot of the more developed economies are, in some sense, hampered by the existence of legacy infrastructure that when you're building fresh or building greenfield, as it were, you don't have the necessity to embrace. And this is why, although there are many emerging markets where, for example, cash remains a high percentage of activity, where credit channels are still very limited, the deployment of financial technology to open up those channels much more rapidly than would be the case without digital engagement and transformation is, in our view, a very significant opportunity. So what are the necessary ingredients? One of those is to have a government that has a sufficiently strong vision and direction of travel that it wants for its economy to enable this to take place. So many dimensions, one of which is the deployment of a coherent regulatory strategy that encourages the growth of fintech applications, reasonableness in terms of what KYC, AML, and similar regulations require, and then delivery of services using digital engagement. Yeah. So if you're looking to see people engage with the digital economy, having their benefits and their rights and their access to key and critical services delivered digitally is one of the things that makes digital adoption grow quickly.
Fantastic. You mentioned legacy infrastructure. Khalifa, you know about that?
Yeah, I might know one thing or two. Being
you know a thing or two, which works in your favor, but you know, Etisalat, now formerly known as Etisalat, it's now and this is really important sort of part of your evolution, which is still ongoing. Yeah. But you know, telco companies have something that I guess a lot of other companies do not. You've got access to consumer, you've got the SIM cards that has data of people, you know what they're doing. I'm not saying you're tracking us, but I'm saying you're able to engage with consumers in a very different way, and you have access. So tell me how you're evolving at the moment and how this plays into the fintech space.
So, I mean, telecom companies in general, and for our case, Etisalat, and in particular, has always been a contributor of accelerating the digital economies of the countries that we're operating in. The obvious thing that comes to mind always is the telecom infrastructure, because we've seen also throughout the world, countries with high penetration of fiber, countries with high penetration also of wireless advanced technology, it contributes also to the fast growth of the economy of the market. But as you said, that's not it. I mean, for the longest time, we've been, as telecom companies in general, we've been looking at focusing also on our telecom services because we've enjoyed double growth from the early 90s moving on. A lot of the countries around the world has realized that this is...
With like the landlines and the actual copper cables.
That's right.
Yeah.
And in the last 10 years, we realized that we need to build a new growth. And as you said, the asset that the telecom company has is not just the telecom services. There is the reach. I mean, who has a relationship with the whole population of a country? You have the government, and then you have the telecom companies. And this is not a casual relationship. This is an intimate relationship because you know their biometrics, you know their all IDs, and then the services that they also enjoy. Can you build credit scoring algorithm out of that data? Can you provide to give them solution, lending type of solution? You bet. So this is where we, a few years ago, I mean, we've tasted the sweetener from growth in non-telco, and then we said to ourselves, do you want to continue having it as a hobby? As what we call it in our industry, a value-added services? Then we realized, no, it's not a value-added, it's a core growth. We have the right to play in this new areas, and we have the right to win in this area because we have what it takes. We have, of course, the cash to back it up, investment in that place, whether building it ourselves or investing in new companies. We have a tech factories in these companies that crunching in and out so many different products and services. So again, we can use that factory also. And again, by partnering or investing in some of the companies, that agility will be a lot faster. So we can leverage in all of this to also contribute to the society that we are in. If it comes into the financial inclusion, we tick that box for the telecom inclusion, connectivity inclusion, communication inclusion. I mean, for those who are old enough in the room will remember having a fixed phone or even a mobile phone, it was a luxury.
Yes.
Nowadays, the whole population of a country, from blue-collar workers to higher up, everybody have the same type of connectivity. They can communicate in voice, they can do their own data. Why can't we replicate that for financial services?
And actually, it has been, we spoke about this before the session, with M-Pesa. Do you guys know what M-Pesa is in Kenya? An incredible digital platform. I mean, you make payments on those analog old phones, and it just changed things so dramatically. But then the issue then becomes, are you a bank or are you a telco company? Are you a digital company? And then the lines start becoming blurry. Do you think you're going to be adjusting and becoming more of a bank-type
telecom companies are highly regulated, compliance organization, because they're used to regulation from the telecom regulator perspective. So looking at the growth opportunity and a different type of regulator are there. So we always tell to the central banks in the market that we're operating in, don't worry, we're a compliance organization. We abide by the license requirements and the regulation and the all the things required. And then we behave like, depending on the license that we take, whether it was a digital money license, whether it's a lending license, other things that we can do.
Fantastic. Minister, you want to jump in?
I just want to say I respectfully slightly disagree with my brother, because there's always this debate between, having a level playing field between the banks and the telcos who are coming in. Yeah. Because while everyone is compliant, but the compliance standards for banking or traditional banking institutions, KYC, AML, sanctions, transaction monitoring, is at a very, very different level.
Capital adequacy ratios, and things like that. We'll touch on, I just want to get Amna to jump in here. We haven't heard from you yet. I want you to give me a sense of some of the promising fintech solutions that, we've been discussing some of these and the role that telcos can play, for example, that are evolving. How are you seeing the industry at this point?
Sure. First, let me agree with Khalifa and disagree with you.
Aha, okay.
Not because Ian is a great partner, but I think one of the key distinctions that I see between traditional financial institutions and players like telecom operators entering into financial institution is that they're serving a different segment. Historically, SMEs and certain segment of gig workers, which are actually below a particular income threshold, are ignored by the financial institution. And there's a reason for that. There's a lack of risk appetite. There's a traditional way of underwriting those customers. To your point, the capital requirements are different for those financial institutions, so that segment is not served. Even in mature markets like UAE, what EAND is doing by providing access to gig workers, a remittance offering at an affordable rate for sending money back home, and some of the work that I'm doing with telcos in Africa also, it serves a segment that historically has not been served by the financial institution. So that's why I think it's still a win-win. And regarding the level playing field, in Africa, the licenses that the telcos can operate in are exactly the same licenses as financial institutions. That's why many times they have to go with a BIN sponsorship model, because they are unable to get a license, which is like a 3-4 year process. Yeah. But I think the key distinction is they're not serving the same segment. And that's why, from my point of view, it's complementary. It's going to be beneficial for the economy. It's going to be beneficial for the country's GDP.
So, Minister, I think you lost the argument. Yes?
There are two of us.
Okay, I want to get Blythe and...
May I add a comment, which is...
Yes, Blythe.
I'm sorry.
You go first.
Okay.
No, Blythe, go for it.
So I think this is one of the opportunities for young companies to partner with more experienced companies, because there are certain circumstances where a single license can cover the waterfront, as has been described, others where it can't, either for regulatory requirements or just because of legacy and history. Young companies that specialize in providing efficient delivery of services like KYC, AML, transaction monitoring, and so on, have the opportunity to partner with legacy businesses that have perhaps come to the space from a different perspective. What the legacy businesses have is the benefit of an extraordinary penetration of existing infrastructure and a sticky and often growing customer base, but they may not have the perspective of what it takes to be regulatorily compliant. What the younger companies lack is what the more mature companies have. And so when we look at younger companies, we often seek as a criteria their ability to partner well with legacy players. And when we look at mature, visionary players. Right. How are we doing? Okay. And what we look at when we invest in more developed companies is often the ability either to develop that technology themselves or to partner with others and acquire it from often younger companies. That's what's making the speed of development here so interesting, is each advance leapfrogs to the next one more quickly, rather than the alternative where you wait for an incumbent to have to develop every single capability by themselves.
Yeah, I think the key word there is alternative.
Yeah.
I mean, us as an operator, for example, there's a fallacy, for example, in Pakistan and across the region, like we're in Bangladesh as well, saying that it's an unbanked population. That's absolutely false, because with the telcos, which we partner with, everyone has a wallet. So if you have a wallet, that's a bank account. So what we do is, and when I say alternate, that's an alternate form of banking that we partner with for us to be able to digitize the lending aspect of our business. But the second aspect of it is alternate scoring mechanism. The problem with the traditional bank is they will look at a customer in a very different way of how we look at the telco data that individual has or that business has, for us to say, how worthy are you of forms of credit?
So can I ask you this? Do you think that you have a better appetite for risk with these customers versus, say, the real legacy issue here are the banks, by the way, not the telcos? I think the banks are even more sort of legacy companies. Do you have a better appetite for risk?
Absolutely. For the segment we play in.
So one thing if they had to get banked at a formal banking institution, do you think that they would get credit?
They wouldn't go. So what's happening, it's really interesting, especially in the UAE, and now it's happening in Pakistan as well, is a lot of the banks are approaching us and saying, look, this is a segment that does not make sense for us, because we'd rather do a $2 billion loan to ADNOC, for example, make a spread, that's it, risk-free. It's a risk-free loan for us, as opposed to going to the segment of 100,000 loans at a smaller ticket size. So they partner with us as a distribution model, saying, here's balance sheet, you be that engine room for us, so that you can attack that segment of SME and individuals in the blue and gray collar worker space. That's essentially who our target market is. Those who cannot get access to financing because they're just overlooked. They are underbanked and unbanked.
I don't think you should call it a better appetite for risk. And if you do say things like that, the banking regulators in the region will come out in hives. They don't want more risk taken because we're deploying fintech solutions in a country. What it should be described as is a better perspective or a better ability to assess risk by using a much wider and more sophisticated and technology-enabled aperture of how to assess what are the risks inherent in the nature of the population that you're serving. And the ability to nimbly and swiftly build and deploy that technology is where the magic is. And what actually you're doing is taking less risk than you would if you were limiting yourself to the old-fashioned banking way of thinking about assessing risk.
So it's actually perception of risk here.
Yes,
you know, what the
absolutely.
perception is.
It's the appetite, and when you look at the appetite, there is two components of it. The cost of acquisition, so that's, I mean, if you're a bank and the cost of acquisition is high for that particular segment that does not give you a return, you'll stay away. So the cost of acquisition, when it's our advantage comparing to both matured bank and startups, because for both of them, the cost of acquisition is high. For us, it's a fraction of whatever the cost.
Yeah.
Yeah.
And then the risk, credit scoring related, and that's where also our data and insights allow us to see the behavior of those users and being able to build, you know, a very small tickets, whether it's for micro lending type of services, maybe buy now, pay later at a smaller ticket, and then you can build the services as you're going along.
Minister, I want you to jump in here.
No, I think I agree with what is being said there in terms of the role which is played with the help of data and data analytics and actually understanding the value chains and supply chains and how that behavioral stuff then actually gets back into algorithmic learning. So I think the model that's being discussed here, although I do think the traditional banks are also moving in terms of financial inclusion, but wholesale lending into the fintechs and then fintechs going in for certain segments which are underserved and unserved, I think makes sense.
And you want easy access. If you know, we're talking about the farmers in Pakistan, you don't want them to go to a branch somewhere brick and mortar. You want them to have that accessibility on their phones or something far easier, and fintech solutions play a big role in that, Amna.
Yeah, so I'm sorry, I started a different debate altogether instead of answering your question. So I think there are a couple of things that I would talk about very quickly. So first is fintech solutions are very, very scalable, but in this particular region, you have to prioritize the markets, right? When people say it's one Africa, it's technically not one Africa. So if you take Kenya as an example, where we do a lot of work, right? M-Pesa has leapfrogged a lot of things.
And it failed in South Africa, by the way.
Absolutely, but also the regulator allowed a telco-led model years and years back. So 30% of the country's GDP is going on M-Pesa rails, right? Compare it to Nigeria, 178 million population, only 0.7 million people use mobile money. Because Nigeria, the regulator allowed a bank-led model. Only now the licenses are being opened for telcos. So you have two markets in Africa, and if a fintech says, when I go to Africa, I'm going to pick up two big markets like Nigeria and Egypt, it's just not possible, right? If you want to pick Saudi, Egypt, and UAE, not possible. Egypt is still working on a wet signature, right? It's very, very hard for fintechs to operate. So many times population is considered as one of the key criteria for fintechs to scale.
It's actually policy.
Yes, which is extremely, extremely important. Which brings me to my second point, which is gaining trust of the regulators and the customers, right? I am very comfortable that Ian Etisalat has my data. I've never ever questioned a telco operator having my data, right? I've never questioned my bank having my data. Would I question my fintech having my data or Meta or Twitter having my data? Probably yes, right? I don't have the same level of trust there. So I think gaining customer trust is a big thing. The second I would say is the regulatory process in terms of driving innovation and financial inclusion isn't easy. In many countries, these licenses take years and years. So instead of having a B2C approach that I have to be an app, I have to be in front of the consumers, to your earlier point, think about B2B. So you can actually sit behind EAND and say, I'm going to leverage the distribution, but I'm going to use my tech stack and complement something that they're offering, right? Last, I would say is, I will give an example of MTN to bring this point to life in Africa. So we have a mission where we are working with them to provide a dignified life to Africans. It's a very, very simple mission, right? How do we do that? If a woman is earning and coming back home, many times, actually, the husband takes the money for gambling, right? If we empower that woman to have that money on a virtual card, which is already part of the wallet that she has with the telco, all of a sudden her money is safe. So she's not only building a family, but she's building a community. And you've done this through a very simple solution of a virtual digital card that's attached to her telco wallet that she's anyways using. Let me give you a second example. Our farmer selling oranges on the street, anywhere in Africa.
Yeah.
This farmer is out of the financial inclusion system because he's accepting cash as a payment, right? So nobody knows how many oranges he sells, and could he do a bigger business? But if I equip the device with an acceptance point, which means he doesn't have a terminal, but his phone device can accept cards, and if I equip the consumer with the virtual card, then all of a sudden this entire transaction of this farmer or seller is in the financial ecosystem, and then the same telco is using other elements of data to underwrite this farmer. And that's how the micro and nano loan starts building.
And it's amazing, and I've seen it in action in Africa, with MTN and M-Pesa. One of the things that we have to keep in mind, these low-income earners, when you take a fee as MasterCard, anyone takes a fee, it is money for them. And they have told me, and it's one of the biggest issues. Yes, M-Pesa works, especially for, when you're looking at sort of payments, far distances, or when they really have a cash crunch. But the preference is cash because you're taking money. And I understand why you need to get a fee going. But you can't really think about the low income space and say, listen, we need to move the informal into the formal, but it comes at a fee. For these people, and I cannot underscore this enough, every single cent counts. Every cent counts.
But you would see that when I look at an ecosystem, right, you have individuals, you have SMEs, you would have an acquirer, you would have an issuer, or whoever is getting a license. At the back of an issuer, you may have a micro-lending institution. In the middle of an acquirer and issuer, you have a tech company like MasterCard sitting. The entire ecosystem has an infrastructure and a cost, right?
I get that.
And I don't think so the entire cost is being borne by the individual. Because if they have to go to the financial institutions for underwriting, A, they will not be underwritten. B, they will be underwritten at an interest rate which is extremely high. Third, they will not have the terms. In many parts of Africa, they have something called the daily loan. So you get it in the morning, and it's only for 24 hours, right? It's for you to pay your electricity bill. It's for you to actually just wait till your salary is given back to you, right? So I think I get your point around it's working, but the fees are high, and I think there are lots of programs.
In relative terms, because you mentioned the man with the oranges, and I've spoken to so many women that sell fruits and vegetables, for them it's critical. And I don't want to get into sort of debating that, but I'm just saying, like, we have to think about what it's going to mean to move the informal sector to the formal sector, Minister, and that's the reality. And while we can talk about all these amazing solutions and talk about it in the comfortable space we're in right now, these people have very different realities. So how do we get them on at mass scale?
And I think I would like to echo what Amna just said, that it's, we think digital adoption is mobile first and all these fancy solutions, but one of the most vulnerable segments in Pakistan is where we make cash disbursements to women. It's under the Benazir Income Support Program. And it's unfortunate, but that's the reality on ground, that they don't want all cash coming to them, which is given by the government, because they say the moment you give us cash, our son takes it away, our brother takes it away. So part of this you give us in cash, and a lot of this you give in the form of digital wallet. Just think about it, right? Digital wallet. So this is the reality on ground. These are feature phones. These are not your, Apples or whatever.
They're sort of,
So that digital adoption is going on in that direction a big way because of the reality on
The value of safety is significantly higher.
I mean, it's really fascinating. Omer, you wanted to jump in?
I think that's something which is really important, is the idea that omni-channel is something that is required in these nations. And I think there's a fallacy again around what people think about fintech in emerging markets, that suddenly everything is digital and there's no physical presence.
You're going to leapfrog and that's it.
That's my language, that's BS. Because what happens is, if you look across any of these markets, Nubank, for example, is acquiring a telco. Why? Because of physical presence. You look at Bank Jago in Indonesia, they have a physical presence. You look at M&T Halan in Egypt, they have a physical presence. The point is that if you do not go omni-channel in these markets and have a physical presence, your ability to scale as a fintech is going to be limited, because you are dealing with different levels of literacy and infrastructure in each of the countries you operate in. So a branch network is actually required, not a traditional branch network. This is what the banks are doing anyway, for example, with a different scale, is they're setting up a different kind of branch that existed 5 years ago. And that's what I think fintechs are doing. We are in the midst of acquiring a microfinance bank, for example, in Pakistan. And the idea is we're keeping a lot of their branch network, because to penetrate the agricultural segment and go into rural Pakistan, it is impossible for you to do it purely through digital means.
Wow.
Because they also trust going to a branch. They don't trust a digital interface.
Right now, yeah.
So it'll evolve.
Oh.
But the point is that it takes time for this to happen, and you need to work with the time as opposed to dreaming of the future and waiting for that to happen.
You know, and part of this conversation is to talk about how we can scale some of these fintechs cross-border. And one thing, I mean, Amno alluded to this. It's, you know, does the same solution work for every single country, even though it's in the same region? I'm going to be opening the floor to questions in just a moment, but Khalifa wants to jump in here quickly.
Yeah, I mean, I agree. I mean, we operate fintech right now from Morocco, Egypt, Saudi Arabia, UAE, Pakistan, Afghanistan, and a whole lot of Western Africa. Not only that they're different, but only with our two matured market. We have Money in the UAE, we have Mobile Pay in Saudi Arabia. Even within Saudi Arabia, even within UAE, when you segment the users, the use and the needs completely different. The aspiration is, as the minister mentioned, is when we say financial inclusion, we really want the enrichment of those users, regardless of who they are, to participate, not only for a virtual card or a physical card, but also where they can have an account deposit. If they wanted to make savings, want to make some money, they want to do investment in gold, want to make investment. Every single person of the country that they are living in should be able to cover all of this. Now, the simplicity of the fintech is will being able to segment it to the power of, to the one users, and being able to enrich that type of services as you're going along, rather than, focus on one high-end segments and then forget about the other one. And now, cross borders, for example, again, in the Gulf, both UAE and Saudi Arabia are the top two countries globally when it comes to the remittance outflow after the US. And this is also represent for the big fintechs, for the big telco, that they have presence also in market like Pakistan, market like Egypt, being able to reduce the affordability for remitting, utilizing their own channel, and making it more affordable. And I think one of the key indices for countries is how affordable is this remittance that is being sent. I think fintech and telco-powered fintech, they have contributed in these countries by bringing innovative different way of charging the users, bundling, and it's not that typical one-time access and a high exchange rate. I think competition is great. Central banks and government has encouraged fintech to come up and bring type of competition, innovation, and I think the benefit comes to the end user.
Fantastic. I want to open I know that everyone else wants to jump in, but let's just check to see if the audience has any questions. Would you like to get involved? Hello, sir. Please introduce yourself. Name and company.
Good morning. This is Salman Ali. I'm the CEO of VRG, a Pakistani company. So first of all, I totally agree that the telco and the banks, so they need a third-party service provider to resolve they're bridging their service to each other, and that's what we are doing in Pakistan from the last 5 years. So my question with the Finance Minister of Pakistan, sir, we have a subscriber base of 196 million in Pakistan, out of which 54% are smartphone users and 46% are the feature phone users. Those feature phone users were nearly around 90 million people is actually having a wallet, but they are not able to operate it. Why? Because of the fact that don't have the smartphones with them. So what is the strategy behind this, that how we can just get them into the financial ambit and get those services for the banking side so that they can acquire those services by using the same algorithm which M-Pesa did in Africa?
Thank you so much.
Thank you.
So I think as you know, some of the new assemblers are coming in, and they are producing now phones which are not just feature phone, but they have the smart features built in. Having said that, we need more of those as we go forward. And I think from the telecom ministry, there is a real push now in terms of bringing in the financial incentivization as we go forward. Now, whether we can bring it in the upcoming budget, some of that, I guess, we'll know in the next 4 to 6 weeks. Thank you.
Fantastic. Any more questions? Hello.
Good morning. I'm Abdigani Diri. Previously, I co-founded a company that offered offshore bank
Sorry, can you
accounts.
just get the volume turned up because we can't hear very well. Thank you.
I'll start again.
Thank you.
Good morning. I'm Abdigani Diri. Previously, I co-founded a fintech that offered offshore bank accounts to folks living in emerging markets. So the discussion of unsecured lending is fascinating. It's one of the things I've worked on previously. There is a huge question mark around the actual impact of unsecured loans in emerging markets. I think the real issue is really around the inflation that a lot of people face in these emerging markets. So I'd love to get your perspective on what they can do to protect their money from inflation, whether it's holding it in other currencies because of the depreciation in a lot of these markets. Thank you.
Yeah, currency issue. Romeo.
Yeah, so that's a predominant part of our user base. If you look at across these markets, it's the blue and gray collar worker that make up majority of the economy. They're the ones who their basket size is most impacted by inflation, because if you look at inflation as indicated for a lot of these places, it tends to be driven by food price inflation, which as someone as a higher middle class worker is not impacted as much as a blue and gray collar worker. What we do, for example, so our core product in that segment is earned wage access, where salary cycles across these markets tends to be between 45 to 60 days for 1 month's worth of work. So what we do is we allow them to stream their wages in real time. That one causes it as a savings mechanism, because why wait till the end of the month to be paid when you can pull that money out as you earn it to be able to use towards utility bills, your grocery, etc. And that's a key aspect of it, where you say take it out, use it for your expenditure at a time where that expenditure is cheap. That's one. Two, take out your money early and put it into a gold savings product, so that when it's time for you to actually use that money, it's sitting in something that's yielding you an income, as opposed to something that's actually depreciating in value over time. So the numerous products you can come out with once you have the user on board, again, with a credit solution, for them to be able to diversify them into other products, for them to be able to keep them fighting against the inflation gauge that happens across these markets.
Fantastic. Okay, we've got about 7 minutes left, and I want to get a wrap from all of you and see how we're going to help push this segment further in the market. Blythe, give me a sense of what you're doing right now and how you see the trends evolving within the fintech space. I mean, we've already ascertained that every market needs to be dealt with very differently. You've got interesting fintechs that are popping up. And what are their needs, and what kind of trends are you foreseeing?
I think as you look ahead, you're going to see increasing levels of digital penetration at all levels of society across the globe. You're already seeing that. That trend has been accelerated by the coming of age simultaneously with many different technologies, whether it's the phone evolving into the smartphone, expansion of broadband, reduction of costs of data storage and transmittal, and a growing interconnectedness between the components of the financial system, which traditionally were very much isolated. The role of fintech is to help accelerate that by deploying modern digital technologies and data and analytics across the pre-existing infrastructure and the relationships that already exist, and allowing the learnings from that to enable the service of the unbanked and the underbanked, or the, let's call them digitally excluded, because it's a lot more than just banking services. Yeah. It's insurance and credit and other things. Using those technologies to provide access to the underserved is going to be the most impactful trend of the next decade. And you don't have to look very far to see the signs of those seeds already being deployed.
Fascinating. Okay, Khalifa.
So they say it takes two to tango. I think for us to make an impact on the not only financial inclusion, but intelligence and smart and rich inclusion globally, I think the collaboration of all parties need to happen. From the government, represented by the central bank authorities of each markets. I think a lot of the countries that we have operated in had, in the old days, protection of the financial institutes and the banks, but we have not seen an impact across the whole society. So for that to open up, we've seen the evolution of new license, new regulations, small license rather than a full-fledged lending license into a small microfinance license, buy now, pay later license, digital money license. I think having these license and collaboration among all players, not only the established financial institution, but other players also with the ability to make an impact. Telecom operators are a great partner of this government that they have worked in one topic. They can evolve this topic also for another part, and also supporting the startup, the fintech, allowing the collaboration among all. I think with that, we'll be able to crack it and we'll be able to make an impact globally.
Fantastic. Amna.
So just to add to what has been said, my grandfather used to say not every problem needs to be solved, you know. So I think it applies to both the fintech and the large organization. At times, I look fintech spreading too thin, both geographically as well as from a solution standpoint. The beauty of fintech is when they go deep into one particular pain point and they solve it, which is exactly something that large organizations struggle to do it, right? So going back to Khalifa's point around collaboration, a lot of fintech have the aspiration of being B2C, becoming the Klarnas of the world, and making sure that everybody has the app, you know, and the app is the innovation, app is the way to do business. I would instead suggest focus on your niche, become a B2B player instead, and become that B2B provider to the large firms who actually are lacking exactly that, but they would give you the scale. You can ride on the licenses that they have. And this kind of collaboration model would definitely accelerate financial inclusion.
Fantastic. Omer, do you want to jump in?
Yeah, I think just to echo what's been said, is collaboration is key. Especially as you go across geography. And this is for two fronts. One, we do this, one with banks, telcos, but also respect to the regulator, because as you become larger, the more regulated you're going to be when it comes to fintech. And us as fintech entrepreneurs, we don't have that experience. That's one aspect of it. But two, exactly right in terms of the B2B, our ability to scale across these markets has become much easier through collaboration. I'll give you an example. In the UAE, we now service over 250,000 individuals in less than 4 months of being live in the country through collaboration. Because there's no point in me going out and getting the same user that the telco already has or that another WPS provider already has. I might as well partner with them, provide my technology service, bring balance sheet in to then be able to bring that on. So I think this is something which is key for the next decade. Where the previous decade, I think banks, financial institutions, fintechs were like this. And I think it's time for a collaboration between the two.
Minister, we're going to end off with you. You've left the private sector to go into government. So you come with a completely different perspective of, you know, banking, of your experience throughout your career and bringing it to government. You know, what would you say is absolutely vital in helping transform Pakistan, you know, tied to the fintech space, focusing on how to get people to use less cash and be more plugged into the formal economy? What are you bringing to the table?
I'm not sure what I'm bringing to the table, but I can just share some of the experiences that I had in the private sector. First of all, I think all the use cases that we just discussed, I think we are all in wild agreement that this digital journey has to be accelerated. And the bank that I just left in Pakistan is the largest bank. In 2018, it had a client base of 12 million, and end of last year, it had a client base of 36 million. And it's not because of the infrastructure, the brick and mortar. It was all through the branchless banking and the digital journey. So we need to stay on that journey. The second thing,
because the bank became more digital?
Yeah.
Okay.
And partnering, because with fintech, I've always maintained you work with them, you partner with them, and you invest in them. And I think that ecosystem has to move forward. The other thing is, I mean, we talked about all the technology, but we should never forget people and process, because I think these are what we need to change in attitudes, change in mindsets. If you have a broken process and you go ahead and automate it, that doesn't work, and that's where I think the fintech solution going into verticals becomes very important. The client buying behavior, obviously COVID changed it in a transformational way, right? I mean, they quote someone, right, that there are years when nothing happens and there are weeks in which years happen, and that's what happened with the client buying behavior, and we need to continue to now cater to that. And the third thing I would just say is timely decision, timely execution. Whether it's the regulatory agenda, financial incentives, the infrastructure, the availability of affordable smartphones as we go forward, and lastly, the international collaboration, what we're doing here, and then with the help of DCO in terms of bringing international best practices into Pakistan. Thank you.
Fantastic, Minister. The government's great, should be very lucky to have you joining in the ranks there, moving from the private sector. It's a big job. And great to have this conversation with you today. And thank you to all of you for joining us. Round of applause, ladies and gentlemen, for our panelists today. And I hope you have a very successful World Economic Forum. The next few days are going to be fantastic, filled with incredible conversations. I wish everyone all the best. Thank you so much.
Thank you.
Fantastic, thank you. I don't know how I didn't die of the heat. It was so hot.
Tomorrow.